Hi there, welcome to this week session. Right, so again, just remind everyone before we begin. Quick disclaimer: everything we'll be covering in today's session solely based on educational purposes, and yeah, just my personal point of view. And of course, since we are talking about the markets, at the same time also covering some of the ideas and opportunities available. Just make sure that you are aware of the risk involved, okay, and always manage your risks according to your own personal risk appetite, okay. So what we're gonna do, as usual, I'm gonna run through the markets over here, highlight some of the analysis as well as opportunities available. And if you guys have any questions, just feel free to put it into the chat. Um, I might not be able to answer directly sometimes, but I'll take a look at those questions and get back to you. As we progress throughout today's session. Okay. Um, Very quickly, GBP JPY. Just want to touch on this because this trade was pretty interesting. Okay. Managed to hit our target as of today. Pretty fast trade as well, I would say. The trade was actually triggered last Friday. Okay. And of course, you can see this huge bearish candle. Not sure if you're aware. That was the time where Trump actually announced to basically slap a 50% tariff on euro. Okay. And that causes the market to be in a risk-off mode, right? That's where the yen strengthened, came in, tagged us in. Actually went into a pre-drawdown here as well, but then eventually kind of recover and bounce back up, right? In today's report in the morning, I also covered that for those of you who have this trade, you can consider do extended targets and kind of manage your trade according to trading stops. Why is because if today I bring you to the 4-hour time frame, there's a good possibility this can actually continue to go higher, and eventually kind of test or even like take out this high, right? Because from the perspective of this, we have it as a 1, 2, 3, 4, and if this is gonna be wave 5, there's a good chance it will break that high. Okay, but of course, if you decide to just take the full targets out of this trade, it's perfectly fine as well. On average, it's about 1:2. Still a pretty solid one, right? I mean, you can always hop on into the next trade opportunity if you've already exited on this. If you're still trailing it, then of course, just protect partial profits, or even, take partial profits, and then you can throw your stops accordingly. Okay. So just want to touch on this very, very quickly. Since the market is currently still active and running, right? So great. I'll jump back into the dollar index. So dollar index over here as of last week, since Monday until end of the week, and then coming into today, the dollar index has been coming down quite a bit. Dollar weakness has been extended throughout last week, and we did see price actually close below this low, right? So that led me to update the bias a little bit, because last week we were looking at the possibility where this is a 1, 2, 3. If this comes down correctively, we can still potentially push up. But with this development here taking out that low, I've updated the view count here where wave 4 may have been completed, and right now the peak of wave 4 is going to be our invalidation level, and we can expect the price to go lower, right? So dollar index for the week here, we'll be expecting more downside, but of course the market is not just going to keep going down all the time, right? It's likely going to pull back a little bit, and that pullback here, again, if it's corrective, it can present a sell opportunity in the dollar, right? So we're going to look at some of the major pairs, and of course, that carries a little bit of bias into, the dollar index will give us some bias in terms of like the major pairs as well. Okay. So eventually I would expect if the wave 5 is in development, then we'll expect this low to be taken out, right? Okay, so that's the view count on dollar. Then of course euro dollar here will then be expecting upside, right? Kind of like inverse of the dollar index itself, right? So the invalidation level is here at 1.1065. Okay, I do expect that pullback. If you are interested, there might be an opportunity to take a short-term sell pullback. But that's a little bit on the counter trend. If you're more inclined to kind of like trade along with the trend, then I would suggest wait for the pullback. Look for a buy setup instead of like selling it. Okay, but really depends on also the time frame that you're looking at, right? So on the lower time frame, let's say on the H1, obviously right now there isn't much confirmation at the moment on the H1 time frame. But what we can also start to see is that if the market decides to, come down a little bit more, carrying a little bit of momentum in this move, this can also be seen as a break, right? And the market came back down, so that's a potential sweep of liquidity, and then wait for the pullback, to take the sell trade. Okay, and then of course you can see this sequence of bullish candle. If the market can close below here, in SMC model, that's a change in the state of delivery, right? So that's an early sign of a change in direction, and that can be an indication of the pullback. Alternatively, you can go down to the lower time frame on a 15-minute, okay, where you can be a little bit more aggressive and decide to kind of hop on into that trade as well, trading the pullback, right? So this is a 15-minute. We did not really get the sweep of this high, right? But came very, very close. So to me, I would just kind of take it as a double top. We have this neckline broken, and we have this fair value gap. Okay, so this is a little bit more aggressive model, where if price actually pulls back, that can be considered as a short-term sell as well, right? So this entire trade plan really stems from the point where on the higher time frame we're expecting that pullback. With the context of market likely to pull back, we look at that short-term sell. Okay, just bear in mind, because this is on 15-minute, your stop are pretty tight. It's about 15 pips. Of course, depending on the broker you're using, depending on the spread, that may impact whether the trade is worth taking or not as well, right? Yeah, so that's something to note on the euro side, right? Whether you're kind of comfortable in taking that counter trend. GBP USD here, pretty much very clear direction overall. We're bullish as well. Okay, but of course we are expecting some sort of pullback first. You do want to be buying at the top. Between the euro and the pound though, if you want to trade the pullback, personally I would say euro. I'm more comfortable in trading the pullback on euro as compared to pound. The momentum to the upside for pound is pretty strong, right? So this one, I'll personally just wait for the correction to be completed and then look for the buy trade instead. Okay. So we're gonna maintain a bullish bias on the pound as long as this low is being respected, right? So any corrective pullback here can then be seen as a buy trade opportunity. Aussie dollar. I would suggest to be a little bit patient. The current development is just not clear. There is still that possibility where this is part of the entire diagonal phase. Okay, it's not the cleanest looking one, but the whole structure doesn't look like it's gonna just impulse up immediately, right? It looks like this would give us a major sort of a pullback before the pushback up, right? And obviously, these are some of the key levels to look out for. Okay, so this one here, you can see the trade plan is essentially just being patient. Probably not going to spend too much time this week here focusing on the Aussie. Okay, dollar Canadian continue to push lower, right? So the price actually took out this, so we kind of shifted the view count, because initially we were expecting like 1, 2, 3, right? But of course we get that push up here, and then the market just came down. There wasn't much of a trade opportunity anyway, right? Because there wasn't a clean setup. So this one here, basically price took out that low. So right now we're definitely expecting one more push in terms of like wave 5 here, right? So we'll wait for the pullback. We'll see how things develop from here as well. If the price can give us some sort of a corrective pullback, we can continue to look for a short-term sell. Okay, we can look for a sell trade setup. Dollar yen also had a little bit of update. Initially, again, we were looking at if there's corrective, we can look for upside, but it just continued to drop, right? So there's no setup to buy. Right now, I'm looking at this has completed itself, right? WXY. So any corrective pullback here, again, we'll then be looking at the sell side of things, right? Okay, so nothing clear at the moment. We'll need to give the market some time for the development first. Gold, pretty clear cut. If I can extend this a little bit here, we are testing the top, and we are expecting that pullback, right? And this pullback here will potentially, I mean, the key area right now is somewhere around 50 and 618. If it does come down here, this is definitely an opportunity to look for the buy. Okay. I did not share the intraday setup on gold today, okay, because these are all in 15 minutes time frame and things kind of shift pretty quickly. So I don't include, some of these trade setups in the report on the email, right? But again, the setup itself, you can see the model is exactly the same, right? Whatever time frame you're using, you have this liquidity sweep, right? And then the market came down, it broke that low, and then you have this fair value gap, right? Which so happens it's a gap over the weekend, right? And then the market pulls back, we got involved in it, and then a pretty straightforward trade on gold, right? So again, this setup stems from the perspective where on a higher time frame we are expecting the pullback. Okay, so again, the framework, right? Kind of emphasize quite a bit, like direction, setup, and context, right? The setup is the one that gives us our entry point, right? We have the conditions, the criteria to execute the trade. But it's not just the setup itself that allow us to take trade, right? We need to be clear, like the direction and context, right? So, like the case study that I kind of share on gold, right, or even euro dollar as a potential setup to look out for in the near term. It really comes from the high time frame expectation of a pullback, right? And then obviously going down to a lower time frame is the option to choose the pullback trade, okay, which is the downside. Then of course we need to have the setup which we had on this, or even like potentially on the euro, we have that setup in place. And then of course the context is understanding that, all right, this is a short-term play, it's a counter trend, technically quote unquote is a higher risk. Are you comfortable with that and things like this, right? Okay, so gold, that's something to know as well. I would now look at the buy opportunity when price actually pulls back. Okay, now obviously if you look into the hourly, okay, there might be an opportunity that we can look to trade to the downside as well. Okay, but of course you need to have a valid setup in place. Okay, so at this moment we have this high here, the price took out that high, there's a little bit of a liquidity sweep. Okay, let me maybe just clean up everything. Okay, we can potentially see this as a liquidity sweep with the confirmation where price needs to take out this low, right? Which is not gonna be really ideal for a reversal or a pullback trade, because then if price take out this, likely it has completed its correction anyway, right? And you don't want to be selling at the bottom here where we expect a trend continuation. So if you're interested in that, then you probably need to be comfortable in taking a bit more of a aggressive approach, where you would then look for the change in the state of delivery, right? Which is the idea where you can see you have a train of bullish candle, okay, and then you want to see the market actually close below the start of this, train of bullish candle, right? So that's how the definition of change in state of delivery is. Then of course you also want to see some sort of a momentum fair value gap, as around that fib level, right? So let's just project this a little bit, right? If this continues to come lower, okay, and of course we do have a little bit of a fair value gap here already. If we take fib from swing high to swing low, right? Let's just say the market actually comes down a little bit more, then it starts to bounce up, right? Then you can see there's an alignment of the fair value gap and the fib. Okay, you have that liquidity, you have that change of state of delivery, then that can be an option to look for a short-term pullback. Okay, yeah. So hopefully these examples here are clear. Okay, that you can look for trade opportunities and trade ideas in some of these instruments. Okay, so that's on gold. Silver here, I'm just gonna be neutral and patient for now. We're in the range, so really nothing much that I would be kind of like making a clear trade until we really can break out of the range. Okay, so nothing much on silver. S&P here, I'm actually expecting a pullback, right? Where you can see we are basically bullish, but we had a little bit of a crawl structure. We have this impulsive move, kind of take out that low point as well, and then we are expecting a three-wave structure development. So this one here, I did not put a trade setup in it, right? I mean, technically there is a setup, but for now I would want to give it maybe another day or two, right? Which means by Wednesday morning. What I would love to see before really placing a pending order is for price to pull back a little bit and then go back up from here. So kind of giving us a three-wave structure as its pullback to the key area. Right, so that's something I would like to see. So this would be potentially something maybe on Wednesday. Okay. Yeah, and of course, just understand that if you're looking to sell, you're essentially going counter trend, right? Because the overall structure is bullish, right? The sell is just expectation of a pullback. Okay, which sometimes you just need to be aware. This can be the pullback itself, and this can just keeps going already, right? Okay, so obviously trading the pullback, again, as I mentioned, quote unquote higher risk, right? Because you're going against the larger trend, right? Then we have crude oil. Crude oil here, I'm bullish overall. Basically, we have this push, and then the market kind of gave us a three-wave structure. From Elliott wave perspective, this is an expanding flat potentially, right? And of course, we came pretty close to the 50% mark. Didn't really tag it, but fibs are just for guidance. And then of course, if you go down to the lower time frame, okay, if you go down to the lower time frame of crude oil, we do have a setup, right? We do have a setup. We have this liquidity sweep. Obviously, the price actually then take over that. We have fair gap. We have the fibs there. This morning I did not include this yet because in the morning, essentially price is basically still up there, right? And then again, I don't expect like today's market to move too much. So this would likely go into tomorrow's trade setup if everything still stands. Okay, so sometimes I just like to give the market some time for it to play out before committing to that trade or placing that pending orders, right? Yeah, so that's on crude oil. Pound yen, I think we kind of covered just now as well, right? So kind of expecting this to go higher. You can continue to look for buy trade setup. So for me, probably not so soon in terms of the next buy trade setup. Probably would want to see this go higher, take out some of those highs, and then wait for the pullback for the next buy trade setup, right? Odd yen, pretty similar because they are yen pairs anyway. Okay, but this one here, I'm just a little bit more interested to see how price will come back to this territory as well, right? Because if it goes up, and forms a setup here to sell, to be honest, I'm interested to sell this down, right? At least one more. 1, 2, 3. Yeah, so this one a little bit more. I mean, we need to definitely give it time for it to go into the key level to look for a setup, right? So there's really nothing there as of now. If you want to jump in on the upside here, okay, there is that setup in place as well, right? Because I think this is pretty clear. You can see we have the low taken out, okay, and of course this high here has also been taken out, right? So we have the setup for sure, right? Take from swing low all the way to here, okay. There is that gap here as well, okay. So yeah, this setup is definitely valid, right? So you can also keep tab on this on Aussie yen to trade to the upside if you want, or let's say you kind of exited the pound yen already, or you have partial exited the pound yen and you're trading it with risk free, then you can look at odd yen to stack things up as well. Okay, so that's something to consider. And then we have the pound odd, right? Pound odd overall, I'm still bearish. I mean, the structure here is bullish, but I'm expecting a shift, right? Because this seems pretty corrective to me. We do have a little bit of sign where the market is kind of reacting here, but the confirmation really is when price can take out this low with momentum, right? So that's where I say look to sell, look for sell setup if we get an impulsive break below the swing low. Okay. Yeah, so I would like to see that first before really kind of like committing to the sell side of things. But obviously, if you go down to a lower time frame, you're starting to see that setup building, right? You have that chain corrector. Of course, this one here, technically, we did not break this low yet. Anyway, this low on the higher time frame is essentially that low, right? 2.0780, right? That's the level. Okay. I mean, if you want to be aggressive, the thing is there's no model answer, right? If you want to be aggressive, that's technically a valid setup, right? I mean, it's not a matter of like asking yourself, are you comfortable in taking that risk? Okay. So we do have I mean, if you kind of look at this here, we do close below this, couple of bullish candle. But again, I wouldn't really classify this as a very, very solid trade. It's just that there are some components that fulfill the setup. So definitely something to look into, right? I might put this in for tomorrow trade setup. Yeah, right. Just want you to know that there are some conditions that are missing, but I mean, it's still a risk worth taking, right? Because at the end of the day, you are putting in 1 unit of risk to potentially make a minimum on average 2R. And obviously, if you go for extended target, this can really go all the way back. And the area you'll be looking at is the previous low, right? So I mean, if you trail it, your risk to reward ratio is really there. Okay. Yeah, so that's on pound odd. All right, and then we have BTC. So BTC here, I'm expecting the pullback. But I would strongly suggest not to trade this pullback, right? Because the momentum on BTC right now is very bullish. While we expect a pullback, trading the pullback is another thing, right? When I mean expecting a pullback means you don't want to be buying yet. If it pulls back, great, you get an opportunity to buy. But with the current kind of like sentiment and momentum on BTC trying to sell and trade a retracement, I would strongly go against that, right? I wouldn't suggest you to actually consider that, because Bitcoin pullback is just a very, very different thing as compared to like other asset classes, right? Okay. Yeah. So generally, those are the things to note. Okay. Those are the things that I think it's worth noting, right? I mean, this one here probably need to update on a 15-minute. Okay. But the rest of this pretty okay, right? Yep. Okay. So I see. Okay, Raphael asked about pound odd. I think we cover on that. Novell asks, when do you use FIP 67, 71, 79? To be very honest, there is no one answer to like say when to use which. At the end of the day, it's really a preference thing, right? 67 would give you an average risk to reward ratio of 1:2. Okay, if you kind of like look to targets like that, on average it's gonna be like 1:2. If you go for the 71, right? Let's just change this to 71. It will give you a little bit more than 2, right? Close to 2.5. But then sometimes you might miss out on entry because price doesn't go as deep as the 71 fit, right? Okay. So think of it as a give and take in every decision that you put into the trade plan, right? Because if you want to go for higher risk to reward ratio, then sometimes you miss out on entry. Okay, so you're looking for higher risk reward ratio. You need to, in exchange, you need to give away a little bit of things, right? Where sometimes you might miss out on entry. Yeah, so that's the thing. Okay. So it's a personal choice. It's a personal preference as to like which fit level you would like to go for. Okay. It's not like which one is better, because at the end of the day, some people might miss on trades. But then sometimes you get a better risk to reward ratio. At the end, it's gonna balance things off. Because it's not a huge difference, right? To be honest, 67 and 71 is not a huge difference. Okay. And then I also know some traders, they don't use FIPS, right? They basically just look at, let's say for SMC model, right? They just look for like fair value gap or the blocks, and then they just use those to get in without FIPS at all. Some use price action, right? So yeah, right. Hopefully that clears that question as well. Okay. Good. So generally, yeah, let me just tag this too and just highlight if there's anything worth noting. I think the ones that I've highlighted are definitely something to keep watch, right? Like Oi, Aussie Yen, Pound Odd. Pound Yen is here because I would like to share this for tomorrow's report anyway. I always do a review on the trades we take, right? So I'm just leaving it there, but there's really nothing much on Pound Yen anymore for the week for now. Yeah, gold is coming down, but I don't see something of a setup now. I'll just take it away. Euro, yeah, nothing there as well, right? So I think as of today, moving forward, these three are probably the ones you can keep tab on from the hourly time frame, right? From the hourly time frame. Okay, 15-minute, depending on again what you're looking at. Because price is always moving, right? So this one here probably need to do some kind of readjustment, but you only readjust it if you eventually start to see price starts to come back, right? Because if not, you just keep readjusting, then you need to keep monitoring the markets all the time, which kind of defeats the purpose of it anyway, right? Yeah. Okay. So what's my take on the Swiss yen? Okay, let me go over to Swiss yen. Okay, this is a 4-hour chart. Pretty consolidated here. Okay, so my first impression, my first suggestion is to stay out of it. at least for the 4-hour perspective, I think this is consolidating, right? Whether is it going to be a triangle or not, we won't know for sure right now, because what can happen here is the market can develop in 1, 2, 3. It can be a simple 3-wave move. Okay, it can also be a triangle where you have 1, 2, 3, 4, 5, right? Kind of like contracting triangle. Okay, so yeah, I wouldn't suggest to be too focused on this for the week, because this is developing in a range right now, right? Until it breaks all of it clearly, then there's something interesting, right? So if to keep things the simplest forecast possible, this is what I would be looking out for. Okay, this would be the key level. The simplest forecast would be for price to continue to come down, take out that low, right, which is this low here, and then kind of form the model to take the trade up. Okay, kind of something like that, right? So you can see this is basically our trade setup. Okay, then this will be the key area to look for that buy. Yeah, so that would be my take on Swiss yen. Okay, Euro CAD. Okay, not the best for the buy side of things. From here, okay, we either see this as a, this is 1, 2, 3, 4, 5. Okay, so I would do it like that. Okay, because this is a 5-wave move down. Yes, there's overlapping on things. So it's not your convention impulse 5-wave move. Okay, but look at it from a sequence perspective, right? So 1, 2, 3, 4, 5 is not a complete sequence from a corrective standpoint. Okay, meaning this here can simply be viewed as one leg. This is your pullback, and then there's a good odds that this would go lower and break that low. Okay, and then bigger structure perspective, this would be a 1, 2, 3, right? Which potentially come back and retest this. Okay, so I would take it from that perspective. The difference here is, of course, this move, right? This move here. Because if this move is impulsive and they can't leave behind like momentum candles to the upside, then I will be more inclined to view that this is completed. This can be going higher like that, right? But because this part here is not very impulsive in nature, then I would see it as this is the correction. This is one leg. We can go lower. Okay. So that's my take on Euro CAD for now. Okay. And of course, stretch it a little bit to the higher time on the bigger structure. There's a good possibility this can actually come back and retest this area. Right. So that's my take on Euro Canadian. Would go complete a pullback. Would go complete the pullback. Okay, this is another. Go back. Okay, different data feed. Okay. Okay, so question from Dio is, would Go actually complete this pullback? At the internal count, it seems like and it's on a wave for. Okay, I think you're referring to like if you go down to the lower time frame, you're looking at this as a internal 1, 2, 3, 4, 5, right? And then you have the larger 1, 2, 3, and then this is 4 and 5 developing. Okay, I think you're referring to something like that. Yes, that is a possibility. So if you're looking at this, right, the invalidation on the blue cycle, okay, will be here, right? Because wave 4 cannot break below that wave 1. And then if you are basing on this perspective, oftentimes the bigger blue, which is the blue degree wave 4, tends to come back to where the previous wave 4 is, right? So you can't expect, still expect the same thing where you'll be looking at the deeper pullback, then we'll need a bounce back up, right? So something like that. Okay. So of course, if you take Fibs again from all the way bottom to the top, it's probably not going to be at the 50% mark. Okay, it's not going to be a 50% mark. It's likely all just going to be like trade 2 zone. Yeah, so I mean, this 50% mark, it's not like price needs to hit it. It's just an guide reference in terms of, right, we're expecting the pullback. What are some of the possible targets we can look at, right? So yeah, this is a very valid view. All the kind of rules are there as well. Okay. So yeah, I wouldn't expect a shallow pullback here, right? Because if you look at the wave degree, if you're looking at this as a pullback of wave 4, it's still pretty substantial in terms of a pullback. Okay, that's my take. Okay, so areas, I mean, based on this view here, your area is somewhere between 3308 to like 3270 ish. Okay, so basically this entire zone. Okay, good. Okay, so yeah, that will be my view on gold. Okay. Okay, Nifty index, pretty clear in terms of the bullish structure. But of course you do want to be buying at the top, right? So this one here, I would say it's quite clear. You have this low taken out and then the market just push back impulsively, take out this high. Definitely impulsive, but you want to wait for a pullback before looking for a upside. Okay, so I think this structure is very, very clear. You have your swing low here. Okay, the market is near the top. You don't want to be buying there. Wait for the pullback to look for the buy. Okay, so I think this structure is very, very clear. Cool. Great. Yeah, so generally that's the updates for the week. Okay, I hope it has been insightful, right? And also provide you guys some ideas and opportunities that you can keep tab on, right? You can keep a watch. Yeah, so all the best for the week itself, and I'll see you guys in the following week. Okay, all the best. See you guys then.